Hello guys, welcome to the Trading Parrot. Bitcoin is sitting right below the premium price. We can see how this order block is holding any move to the upside. We finally managed to confront the big boss of the bull market once again. But is this going to be the time that we finally conquer it? In today's video, I want to talk about that. I want to cover important indicators, MAs, Fibonacci levels, CME gaps. I'll give you my take on what's going on with the Bitcoin dominance, how I think this could be affecting the performance of the alts, the current state of Ethereum BTC pair, which is impossible to ignore right now. I'll cover the most important long-term signals that we are seeing, including servers, on-chain data analysis, and what's next for the Goson Channel as well for the long term. So sit down and relax. Make sure that you're subscribed to the channel. Hit the like if this is the content that you're excited to hear about. Watch the full video and do not forget to go anywhere without writing a comment down below. That really helps the channel to continue growing. So yeah, we currently broke out from this bullish flag that started from March, but the actual target hasn't been met so far. So if we take this high here and we place it right here, we are talking about 35K more or less. I'm not saying that that's where we're going straight away, but just by looking at the chart from the distance, that is what I see. If we look at the long term, 35K will coincide with the lowest level that we had in this full move around this pivot early 2022. So personally, I think there is a good chance that we make a move to 34, 35K. I think it's got a good likelihood. But the trick is in how is it going to be the journey to get us there? Is it going to take many months? Are we going to get rejected once again, print a higher low, do a few more struggles before we can finally destroy the big boss of the bull market? Let's have a look at all the data that we currently have, not just TA, but also on-chain data analysis and where is the liquidity, because ultimately the liquidity is what's going to attract the market maker in certain direction. When something is too tempting for them to grab, they will just grab it. In the 15-minute chart, I'm only seeing that we are still going in a sideways move and consolidation. It seems like we broke out from this structure right here and we are above it and potentially getting ready for a retest. As we're going to look later in the video, this area around here, the 29.5 and anywhere in the mid 28s, it's loaded with liquidity. We'll see if we can get that low. We're going to look at the open interest because that's going to give us massive clues of what could go next. Guys, I still have 3 days and 4 hours left of this exclusive event that I'm hosting and look up to 60,000 in rewards. In order to get this sort of massive rewards, all you have to do is open a new account on OKX, write down Parrot in the referral code. You're going to see the 20% rate discount for all your fees. And then using that account, find the link in the description that says exclusive event OKX. Click join now, deposit from $50, trade on OKX, and that's all you need to do. What we're seeing here is the open interest filter indicator on the daily. And personally, I don't like entering long when there's too many longs on the daily. In areas like here, you can see that the price collapses. Also here, you go sideways. I prefer to go long when there's a lot of shorts, especially right after the price has already made a move to the downside. When we can see that there are late shorts entering the market, areas at the top of the indicator where we see a lot of green, whether there is a high open interest or a low open interest, it's definitely not the most profitable move. And right now we are at the green. There's a lot of longs on the daily. And looking at the alts, you can see that on the day, there's been a lot of moves to the upside. The weekly has been amazing for alts. And on the month, less than half have recovered. We have a few of them that have made a massive move, like Bitcoin Cash, for example, that made a move of 104%. Top alt rank on Lunar Crash, we have Arbitrum, Blur, XLM, Compound. Of course, meme coins like Pepe, Veracity, and Matic are in the top 10. And yes, Cerberus print a warning buy around here at 26K, and the buy was printed during this candle. When you get the warning buy, I told you to pay attention. Opportunities are just around the corner after a warning buy. If you missed the call, make sure that you're subscribed to the channel. I never miss sharing big macro opportunities, like for example when we are in tops like this, so you are aware that you're taking a big risk remaining in the market, and same goes for calls like this, that you're taking a big risk by not taking action. Currently, Total Free is in a 4-hour uptrend. We are in Bitcoin season 10, so we kind of did a pullback in the performance of the alts against Bitcoin, definitely driven by the last move to 31K on Bitcoin. And here you can see the coins that are outperforming Bitcoin. We have Leo, Tron, Render, Bitcoin Cash, and XRD. Another reason to have a little bit of caution is to see that we are currently in grid 59. If you look at the long-term chart of the Fear and Greed Index, you can tell that it's following a channel to the upside. And as I mentioned in previous videos, the area around 45 was right above the support of this channel going to the upside, which is better opportunity than being at the top of the channel and entering the market. Every time you reach the top of the channel at 68, then you go back to 40 something, and that's how these moves are happening when you are in a rally. Ethereum continues to bleed against Bitcoin. Let's pull in the RSI and let's see what's going on at the moment. On the weekly, we can see that we are doing a lower low, but on the RSI, we're kind of printing the same level. So depending on where we close this week, we might confirm that we have a bullish divergence on the Ethereum BTC pair weekly. And this could easily, if confirmed on Sunday, lead on Ethereum to run all the way to 0.066 more or less, which is the resistance. I'm tempted to think that the upside ends up there because we are in such a high Bitcoin dominance. Bitcoin dominance on the RSI completely fake us out to the downside, and now it's back above the trend line. It got very close to 52%, and it continues to print one after the other weekly green candles. And as I mentioned in my previous video, I borrowed this idea from Benjamin Cowen. Somewhere between 53 to 60%, the Bitcoin dominance could start slowing down. Another thing that I really like that Ben is mentioning in his videos is that the Bitcoin dominance includes the stable coins. But in the earlier cycles, there were no stable coins. So when we were talking about 90% dominance, it was against the few alts that were available. If you exclude in this calculation of the Bitcoin dominance, the stable coins, we are way higher. And I think Bitcoin dominance should be measured without stable coins anyways. The actual Bitcoin dominance currently is much higher compared to what we see in this chart. Bitcoin dominance puts a lot of stress on altcoins, and even though we can see that we have made a decent move on Total Free, this whole move is diverting in terms of higher highs on the RSI. And when you see a move like this, pretty much all the time that is followed by periods where the alts are bleeding a little bit, like here, or maybe not in the full red, but we go below the zero on the RSI, and that's usually a time where we see some pullbacks. So don't be surprised if after this move we see another pullback somewhere around here, and that can happen even if we are going to print higher highs later. Finally, the active address sentiment oscillator, one of the on-chain data analysis indicators that I use to understand whether the Bitcoin network is in a healthy state, is finally back above where we were expecting to go last week, which is good news because it's not just a price fake move, but there's also on-chain data supporting it. We also have the number of unique addresses that appear for the first time in a transaction. It's also pointing upwards, which is great. Since my last video was on the weekend, I didn't update you on this CME Gap that formed by Monday, and it got completely filled by now at 31K. As you can see, CME Gaps give a very high rate of success. You still need to manage your risk because some of the CME Gaps get filled way later and you won't be able to hold waiting until it gets filled, but pretty much all of them have been filled. Right now, we only have left the ones in the extremes. So we have the 34.5K at the top and the 21K. Being totally honest, this is kind of the moves that Bitcoin can do, just a 31% to the downside. The problem is if we do a move like this, it's going to take a lot longer to enter into an actual bull market rally. But if you look in the past, these are things that actually happen multiple times. In every single bull run, there are corrections of 30, 40% or even more, and we still get a bull run. On the Fibonacci levels, we are bouncing and dancing above this gray line, which is great. If we manage to hold this level, we are destined to be able to get to the 34.8. At least that's what this Fibonacci level is forecasting. And look how beautiful this pattern looks. There's a high likelihood that the EMA ribbon is going to flip. Now, once it flips, any touch of the price on the EMA is almost like a miracle. And as you can see here in a bull market, any opportunity to buy at the EMA ribbon on the weekly is really great. And after a point, you don't get any other option. You just miss the run. But in the transition into bull market, you get plenty of opportunities and you can even go back below the EMA ribbon. In 2015, you get plenty of opportunities to buy on the ribbon. On this long-term pattern, I want to give you an update. I am starting to laugh because last week we were below this line and we were kind of entering around here. And I drew this line saying that this pattern says that we are going to the top of this broadening wedge, which is around 34K. TA says that once you re-enter a range that you lost and you print a big green candle, that means that we are reversing back to the top of the channel. And this is not a parallel channel, it's a broadening channel, but still the same theory applies here. The full move is at 29%, but we have already completed almost 19%. So there's a 10% further move according to this pattern. On the Gaussian channel, on the weekly, we are still not flipping in the green, but I remind you that the 6th day is already done and being above the Gaussian channel is just a matter of a few weeks for it to flip into green. And just so you set some expectations, in 2015, once we flip above, there were 60 days until it flipped into actual green. And at the time we flip into green, the price came to say goodbye to the Gaussian channel and it re-met with the Gaussian channel after the blow of top. In 2017, we did the same and we actually stick our heads underneath the Gaussian channel. That was COVID. And once we tested it as a support, we finally called for the bull market. We kind of tested it as support twice, but in between we have COVID, which forced this pattern to happen twice. So we should be looking into a move potentially to 34 and maybe coming back into the channel around here, which is around 28K, testing support and then heading to the upside. That is not my forecast. That is what this pattern is saying according to the previous performance, which is not necessarily going to repeat, but it's got the highest likelihood compared to other outcomes. The CPR levels of June are looking beautiful as well. We conquered the pivots, we conquered this trend line, we broke up the first level of resistance of June, and we are currently getting rejected by 31.6, which is the second level. We normally get to the second and the third in a month that is extremely bullish. We did that in January, we did that in March. So since July is already coming, and after this one that was calling for a lot of volatility, which we actually had that volatility, I will expect that the levels, assuming that we close June in a price around here, we're gonna get them, the three pivots somewhere here, and the resistance and the support somewhere there. And I will expect the price to come here to retest the pivot for a potential continuation. And it doesn't necessarily need to be the top. It could be one of these three pivots. For the shorter term, RSI on the 1 hour on Monday faked me out around here. It came back down, it formed a bullish divergence, and that was actually the golden entry around here. And as you can see on the 4 hour, it's also playing a few games. It came here and instead of continuing like most of the time, it did a plan B, which is to re-enter, fake you out, find a new bottom, and then do the actual move to the upside. We will have to see if this is a second fake out. Sometimes it happens, it's rare, but the most likely scenario right now is a continuation to the upside, since it's also pushing above the level of resistance on a second attempt. It's extremely rare, but it could happen that this fake us out again, in which case I was mentioning that this level in the RSI should provide strong support for our RSI that is currently located at an RSI of 42, which coincides with the price of 29.77, which also coincides with this level of the CPR. In terms of liquidity, we have plenty of liquidity to the downside. We have a 21.5, 28.3, 26.1, and of course, all the leftovers that are still hanging around below this higher low that haven't been taken. If we look at fire charts from material indicators, we can see the liquidity is currently highest at 32K on the upside, and there's some support at 29.9 and lots of liquidity at 25. On the monthly, the highest levels are 32, 32.9, and then way above at almost 35K. If you want to use material indicators, make sure you have a look in the description. There's a massive discount for using these charts. Let's have a look at the liquidation levels. We have liquidations at 31.1 and at 32.4. Those are the most significant levels to the upside. We have around 2 billion and the shorts are currently risking the most. Alright guys, thank you so much for watching. Remember to hit the like, leave a comment before you go anywhere, and I'll see you on the next one. Take care, bye bye.